is Bloomberg Brief. I'm Vonnie Quinn in New York. In this month's CFO briefing, we're looking at life insurers, a great barometer of the health of the financial and capital markets. And I'm pleased to say we're joined by Colin Simpson, CFO of Manulife, alongside Nina Trentman, editor of the CFO Briefing newsletter. Colin, I have to start with all of the comments and market turbulence that they have engendered over recent weeks to do with auto loans, some private credit write-downs, of course, Jamie Dimon's comments. What have you been seeing over the last quarter in all of your businesses? Have you been looking more closely at your books?
Yeah, Vonnie, it's great to be here, and it's a really interesting question on private credit. Private credit has grown quite a lot. The important piece to note with private credit is it is often below investment grade and floating rate notes, and so that tends to be a little bit more volatile than public credit. And so it shouldn't be surprising that you get some headlines from time to time. Now, as it pertains to a life insurance business, we don't use much private credit to back our insurance liabilities. But actually, we bought a private credit business last quarter because our customers are demanding that type of asset. So, we're not concerned by the headlines that have come up. Does this mean, anything like the end of the private credit industry? Absolutely not. It's here for the long term, and we're glad to be involved in it for many cycles to come.
Colin, one of the growth areas in your business has been Asia, specifically in wealth and asset management. How do you see that developing from here?
Asia is so exciting for us, Nina. We're in 11 markets from an insurance perspective and 14 when you think about our asset management business. But what's so exciting with life insurance in Asia is the demographic powers that are behind it. We're selling products to people who haven't bought a financial services product before. And so that's really exciting. And so we get a level of growth that you just don't get in developed markets. And as a top 3 insurer in Asia, I think that sets us up really well for the next 10 years.
Just wondering about your business in Hong Kong. Of course, that's an important market for you as well. There's been some regulatory changes there with regards to mandatory pension plans. How will that impact your business?
Yes, so regulation change is just part and parcel of being a large financial services company. We saw some changes in the pension market in Hong Kong. We're the number 1 provider of the mandatory pension fund, and actually what we're seeing is going to provide, different value set for the customer. The administration is going to be done centrally, so that will impact our earnings. We announced it last quarter, $25 million a quarter will be the reduction in our earnings, but we're still very much committed to the market. We're number 1 in the market, and we see strong growth in the Hong Kong pension market.
Just wondering, actually, in terms of your plans for the future as CFO, I know that you're targeting a return to equity ratio of 18% by 2027. How will you get there, and how close are you at this point?
Sure, Nina. We announced an 18% plus ROE target last year at our Investor Day, actually in Hong Kong, and we're well on the way towards achieving that. Now, in the last quarter, we had a little bit more excess mortality, i.e. a few more people died than we expected. And, but when you normalize for that, our ROE is closer to 16.5%. So we're close to 18% at the same time as our growth. And, Asia is going to contribute a lot of growth. We're growing our asset management business quite attractively. And we also have a buyback program. Last year we bought back 5% of our stock, and this year we're buying back 3% of our stock. And that does help the ROE position as we go into 2027.
You mentioned some data that were different perhaps than you were anticipating, Colin, and how that affected you. You're obviously a data-heavy business, models just, primed for AI, if you like. Draw the line for us between your AI investments and your bottom line.
You're so right, Vonnie. When you think of what can impact a life insurance company, we've got factors that are all over the world. We're a global company, and we're affected by markets everywhere. We're affected by demographic trends. We're affected by trends that are in the organization. So when you think of the power of AI and what that can actually do on a real-time basis, there's huge opportunity for us to use AI to make our business better. And that's, to price mortality better. It is to anticipate the markets, and it's also to do real-time reporting and real-time forecasting. So both as an organization and for me as the CFO, as in charge of a finance function, it's really exciting to think about how AI can augment what we do on a day-to-day basis as a life insurance company. So it's great.
Just to follow up actually on the something that you said earlier, you mentioned the acquisition of the private credit manager earlier this year. I'm wondering how you're thinking about deal making and your appetite for that for the year and years to come.
Yeah, so Nina, we're in a really fortunate position that we've got lots of capital on our balance sheet, and we maintain a really strong balance sheet. We've got debt capacity, so we can certainly afford to grow inorganically. But the great thing about Manulife is with business in Asia and North America and an asset management presence in Europe, we don't see big gaps in our portfolio. So, inorganic expansion is something we will do on a needs basis. And so, what we did in private credit, we bought a private credit manager because we saw that level of expertise in the market that we don't necessarily have ourselves. And so it was a great opportunity to use a fairly modest amount of our capital. We spent just under $1 billion for 75% of Comvest. And so that was a good opportunity to buy expertise that we can add to our own and improve our returns. But as far as deal making goes, I think we've got so many more opportunities organically than inorganically.
Colin, you mentioned your wealth management business. What do you make of the market appreciation that we've seen, whether we can continue to see that, and your outlook for interest rates?
So funny. I mean, market outlook has become even harder than when I worked in capital markets. So, I don't have a strong view on where the markets go from here. What's really important for us at Manulife is we maintain diversification. So we're not overweight any particular, theme or trend. Certainly, public credit is something that we hold a lot of, and that's because it really suits our liabilities quite well. So in terms of spreads, they're really tight. And that reflects, just buoyant markets. But we're never complacent when it comes to the market outlook. Interest rates is an interesting one. Interest rates are really important to the life insurance sector, but we're more focused on the long end of the curve. So when and talking about the US here, we had an interest rate cut in September, and we're probably going to get another cut next week when the decision comes out. Actually, when the short end of the curve goes down and the long end stays up, the long end right now is about 4.5%. That's actually quite attractive for life insurance, because when people buy one of our products, they're buying a long-term savings vehicle, and then they'll compare that to what they earn in the bank. And if what they earn in the bank is going down because the short end of the curve is coming down, then our products will look more attractive. So it can be a good proposition for our customers if we see short end of the curve go down. But in reality, it's very hard to predict markets, so we don't take much interest rate risk at all.
All right, Colin, sounds wise to me. That is Colin Simpson, CFO of Manulife, and Bloomberg's Nina Trentman. Thank you both. And just a reminder, Bloomberg's CFO Briefing is a weekly newsletter for and about CFOs, featuring top executives at global companies and covering key trends in corporate finance. You can subscribe at NSUB Go on your terminal.